So you look at the crypto market right now and, well, it seems pretty sleepy, right? Like it's just taking a holiday break, but let me tell you, that is just the surface. What's really going on underneath is this huge battle, a massive tug of war between the big institutional players cashing out for the end of the year and the long-term believers who are scooping up everything they can. All right, welcome to Daily Crypto Edge. It is December 25th, 2025, and this quote on your screen, man, it just hits the nail on the head. This is that classic holiday lull. Liquidity's thin, trading volume is way down, which can actually mean things get weirder, not quieter. Little moves can cause big swings. So let's dig in and break down what's really going on behind the scenes. Okay, so first things first, we've got to get a pulse on the market. What's the overall vibe? Because before we can even think about where we're going, we need to know where we are right now. And that all comes down to sentiment. And yeah, that feeling is straight up fear. The fear and greed index is way down at 27. I mean, that tells you everything you need to know. The average retail investor is just, they're tired, they're pessimistic. But here's the kicker, and you've probably heard this before. When everyone is this scared, it's often a signal to pay attention. This is when the smart money starts looking around because it could mean we're carving out a bottom while everyone else is running for the hills. All right, now let's get to the main event, and this is where it gets really interesting. Because the two biggest names in the game, Bitcoin and Ethereum, well, they're telling completely different stories right now. It's like they're walking down two totally separate paths. And you can see that split clear as day right here. On one side, you've got Bitcoin, it's just stuck. It's consolidating, kind of range-bound. The RSI is leaning bearish. It can't get past that 50-day moving average. And maybe most importantly, the on-chain data shows the old-school holders, the OGs, are actually selling off a bit, distributing. But then you look at Ethereum. Totally different picture. It's quietly building strength, right? It's forming a pattern that historically is super bullish. Active addresses are at a yearly high, and the big money whales, they're doing the exact opposite. They're buying the dip. So for Bitcoin, there is one number you absolutely have to keep your eyes on: $92,300. That's the 50-day simple moving average, and right now, it's a brick wall. Seriously, think of it as a ceiling that Bitcoin just keeps bonking its head on. Until it can smash through that and actually stay above it, the bears are going to stay in charge in the short term. Ethereum, on the other hand, has this massive tailwind pushing it forward. It's called the Hataga upgrade. And look, this isn't just some little software patch. We're talking about a fundamental overhaul of the network coming in 2026. The goal? To make Ethereum way faster, way cheaper. And that potential, that narrative, is a huge deal. It's what's getting the smart money really, really interested. Okay, so that's the setup. That's what's happening today. Now let's look forward. What does all this data suggest is coming down the pipe for 2026? We're going to look at the probabilities, both for the next few months and for the year as a whole. And for the first quarter of 2026, well, the probabilities really seem to confirm what we're seeing. For Bitcoin, there's a 60% chance it just keeps chopping around between $80,000 and $90,000, just more of the same consolidation. But Ethereum, it actually has a slightly better than a coin flip chance, about 55%, of breaking up and making a run for 3,600. But check this out. When you zoom out and look at the whole year, things get really exciting for both of them. The models are giving Bitcoin a 75% probability of finally breaking that massive $100,000 level. That's huge. And for Ethereum, with that Hataguda upgrade narrative in full swing, there's a 70% chance we see it move up into that $5,000 to $7,000 range. Wow. So, okay, these are some pretty bullish long-term outlooks, right? The big question is, how do you actually position yourself for something like that? Well, it all starts with a plan. So let's look at a potential blueprint, a sort of foundation portfolio for 2026. Now let's say you have a moderate to aggressive risk tolerance. This is a pretty solid way to think about structuring things. 40% of Bitcoin, that's your anchor. It's the foundation. 30% in Ethereum, that's your growth engine, right? That's what's going to capture that upside from the upgrade. Then you've got 20% in stuff that's more stable. Think stablecoins or real-world assets that generate yield. That's your stability play. And then just a 10% sliver for the fun stuff, the high beta altcoins, the moonshots. High risk, but potentially high reward. All right, I need you to lean in for this next part, because honestly, this might be the most important thing we talk about today. You can have the best plan in the world, but if you don't have good defense, you're gonna get wiped out. So let's talk risk management. These are the rules you just don't break, especially right now. And rule number 1, I cannot say this loud enough, do not revenge trade. Seriously, the market liquidity is so thin right now, which means prices can whip around like crazy. If you take a loss and then you immediately jump back in to try and make it back, you're toast. Revenge trading is how you blow up an account. Just walk away. Next up, position sizing. This is your survival guide 101. No single trade should ever be more than 2 to 5% of your total capital. Ever. Why? Because it means no single mistake, no one bad call can knock you out of the game completely. This is all about longevity. And finally, here are your do not trade signals. Think of these as giant red flags telling you to just stay on the sidelines. 1. If that fear and greed index gets even worse and drops below 20. 2. If Bitcoin breaks below that critical $80,413 support on a weekly close. And 3, if you see a huge spike in coins getting sent to exchanges while the price is dropping, that's a big warning sign of more selling to come. When you see these things, you wait. Let the dust settle. Okay, to wrap things up, let's look ahead at the calendar. What are the big dates we need to circle for the first quarter of 2026? These are the events that could really move the needle. So literally tomorrow, December 26th, we've got a big options expiry that could create some volatility, some fireworks. Then in January, it's all about the Fed meeting. What they say about interest rates affects everything. And then through Q1, we're keeping a close eye on any regulatory news, like that Genius Act implementation. And of course, any and all updates on the Heikiota upgrade for Ethereum. Lots to watch. So that's the lay of the land, and it really leaves us with that one big question, right? With Bitcoin kind of stuck in the mud and Ethereum looking like it's ready to run, how are you going to position yourself for 2026? Remember, these are probabilities, not guarantees. Stay informed, manage your risk, and we'll see you in tomorrow's update.